Stocks closed sharply higher on Wall Street despite rising yields. Asian markets trade with gains, while the GIFT Nifty too is indicating a higher start for the Indian market. Brent trades near $90 a barrel, but slightly corrects on expectations of a deal between the US and Venezuela to ease sanctions on oil exports. Higher crude prices also weigh on the rupee, which closes at a record low of around 83.28 per dollar on Monday. HDFC Bank reports a mixed bag for the second quarter. Profit at nearly 16,000 crore rupees beats expectations, but net interest income of over 27,000 crore rupees marginally misses street estimates as the cost of funds rises. This is the bank's first earnings report after the big merger with HDFC. And in key earnings to track today, Bajaj Finance could report declining net interest margin in the second quarter. Also watch for earnings from L&T Tech Services and ICICI Prudential Life. US President Joe Biden will visit Israel on Wednesday for talks with Israeli Prime Minister Netanyahu, even as Iran threatens preemptive action against Israel, leading to a potential escalation of the conflict in West Asia. Meanwhile, the IDF says that over 6 lakh Gazans have fled the south after the Israeli warning. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Tuesday morning. The handover from the US has been positive. That is why, most of these global markets are trading well in the green right now. As always, let's kickstart the show by taking a look at what's really happening across the Asian markets, because it is a green screen whichever market you look at for a change. So what's leading the gains this morning is the Japanese market. That's up almost a full percent, a little bit actually over 1% now for the Nikkei index. You also have the Hang Seng market, which is up 0.7%. The Taiwanese index is seeing gains of around 0.4%. And actually, all Asian markets are up at least 0.3% to around 1%, like I mentioned. So it's a good-looking screen across Asia. The GIFT Nifty will also come up for you, and it is indicating that the start for our own markets after that very range-bound kind of session could be well in the green. Around 75 points is where the implied open for our own markets is this morning. So that's what's really going on across Asia. But for the US markets, we had Wall Street indices which ended sharply higher on Monday in a broad-based rally, even as bond yields climbed in the US. So the Dow was up over 300 points, like you can see in your screen, 315 points higher. Both the S&P 500 and the tech-heavy Nasdaq index also finished around 1% in the green. And now, in terms of what we should track from the US, it is expected to be a very earnings-heavy week, right? So we have earnings from Johnson & Johnson, Bank of America, Netflix, Tesla. So all of these very big companies in focus ahead of their results. And in terms of data, investors will also be keeping an eye out on the industrial output, retail sales, housing starts. All of that important data is also due this week. So it is going to be very heavy in those terms. But speaking of the US, let's listen into some important comments from US Treasury Secretary Janet Yellen, as well as former Atlanta Fed President Dennis Lockhart on the state of the US economy and their take on the key inflation trends that we're seeing right now.
The American economy is doing extremely well. Inflation has been high, and it's been a concern to households. It's come down considerably. At the same time, we have about the strongest labor market we've seen in 50 years with 3.8% unemployment. And at the same time, America, the Biden administration, has passed legislation that is strengthening our economy.
We are in a disinflationary trend, but the month-to-month numbers sometimes jump around a little bit. The last report, the CPI report that came in, I thought it was consistent with that story, but it really didn't tell you very much. There was simply not a lot of new news in that report. So I think we can say, yes, there's a disinflationary trend underway. Looks like there are some indications that the economy is slowing. This is desired slowing from the Fed's perspective. But I do begin to pick up indications that maybe the economy is turning over to something weaker in the fourth quarter and going into 2024.
All right, those are some important words coming in on the global markets, but that's what we're looking at globally. Let's now drill it down to our own markets and talk about all of the individual stocks that you should watch, as well as some of the very important domestic cues that we have lined up today. So we have our research team here with the trade setup. Ekta and Surbhi are both here to fill us in with everything that we should track this morning. Ekta, we were just going through the global setup, and that at least looks quite positive.
Morning, Pavitra. Yes, absolutely. You know, the markets ended flat after what was a range-bound session yesterday. But we had the FIIs that net sold around 593 odd crores, DIIs net bought around 1184 odd crores. It was a record closing for the rupee as well, closing low for the rupee as well. So those are key monitorables, despite the fact that today we might in fact be in the green. But just coming to cues, Brent crude is fallen to around $89 per barrel. So maybe there's some amount of stability coming in there. US markets closed higher, earnings in focus like you mentioned. So today we have J&J, which is Johnson & Johnson, Bank of America, Goldman Sachs, all of them reporting numbers. Asia largely higher at this point in time, and the GIFT Nifty, which is indicating a positive start. Now earnings, that's going to be the key cue. So HDFC Bank's result reaction will be important. It is the first quarter post the merger, and the numbers, according to most of the brokerage reports that I've read, are better than expectations or have been in line. Now in terms of numbers today, we have Bajaj Finance, Canfin Homes, Happiest Minds Technology, also L&T Tech, Syngene, Zenzar, to name a few. So there will be continued focus in terms of numbers. But as of now, the global setup, like you mentioned, is more positive.
All right, and that is why the GIFT Nifty is implying a 75-point uptick at the start of the trading session. Ekta, thanks a lot for that. It's over to Surbhi now, who's looking at all of the stocks to really watch for in today's trading session. But Surbhi, all eyes on HDFC Bank today.
That's right, all eyes will be on HDFC Bank. The cost of funds for Q2 were impacted the PNL, but the management guidance remained bullish. The gross NPA ratio came in at 1.34% and the net NPA came in at 0.35% for Q2 FY24. Geo Financial Services, the calculated net interest income was down 1% sequentially, and the PAT has nearly doubled sequentially. CAT, the revenues were up 5.5%. Margins have doubled, came in at 15% versus 7% same time last year. Signed DLM, strong revenue growth of 72% on a year-on-year basis, but margins were impacted. Margins came in at 8% versus 14% same time last year. ICICI Securities, the revenues were up 34% sequentially and the PAT was up 56% sequentially. Apart from this, Grasim will be on our radar. The board has approved fundraising of up to 4,000 crores via a rights issue. And lastly, Godrej Properties, Sidco issues cancellation order for 2 plots that were allotted to the company in Navi Mumbai.
All right, Surbhi, thanks a lot for running us through that entire list of stocks. Finally, it's over to Nigel, who's looking at all of the cues from the future space. Nigel, very flat close yesterday. What should we track this morning?
Well, and volumes were tepid as well yesterday. So institutional activity actually was the lowest we've seen in last many sessions. For me, the biggest cue today will be HDFC Bank. Now, these numbers could at least, help investors in the sense, I don't know whether the stock will outperform, but at least it could be a market performer because year to date, actually, it's been a big underperformer. What did the FIs do yesterday? They lightened positions both on the long as well as the short side, though they continue to remain net short with close to around 73% of their positioning on the short side. A few strikes were active. 19,750 call, 19,800 call, both of them fairly active in yesterday's trading session. And if you just plug in those premiums out there, you get the sense that 19,830 to around 19,850, that's the resistance zone. So that's going to be important. On the downside, the 19,700 put as well was fairly active. There was mixed signs being seen out there, which brings us to the levels. The 19,716, well, that'll be the first mark that you're looking at. That's the 20 DMA. Deeper down, the 50 DMA is what you're counting on. Remember, a few sessions ago, we went around 19,630 and bounced off that. And resistance zone, as the options data suggested, and even last week, we visited those highs of close to 19,850. But it's the Nifty Financial Services Index expiry that will play out. So that becomes very, very important. 2 strikes were very active in yesterday's trading session. It's trading in the middle of both those 2 strikes at around that 19,800 odd mark. So the range comes up for you on the screen. And, the traders are expecting it to stick to that range. The GIFT Nifty, as you all have been saying, it opens with a gap up of close to around 70 points. It needs to build on from here to get a bigger short covering bounce. And HDFC Bank could be the one that will be giving hopes to the bulls. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. Like Nigel was also mentioning, it is going to be a lot about HDFC Bank. So let's quickly take a break. But when we come back, we're going to talk all about the earnings that came through from the banking major. This is the first after the merger with HDFC. Welcome back. Let's talk a little bit more about HDFC Bank now, because it is going to be a lot about that in today's trading session. Abhishek is here to run us through the numbers. Abhishek, on first look, it looks quite mixed. How would you look at these?
Well, Pavitra, to begin with, it's a mixed bag, but more on the good side, rather than being negative, because this was priced in that the merger impact will be there on the P&L. To begin with, slippages at 7,800 crore. Annualized slippage ratio is 1.34%. That is for the merged entity. In the previous quarter, HDFC Bank alone, the annualized slippage ratio was at 1.44%. Asset quality has improved. Gross NPA ratio has come down to 1.34% versus 1.41% in the previous quarter. Now, the NII, that's a miss on our poll. It has come in at 27,385 crore. We were working with a number of 28,190 odd crores. That was on account of rise in cost of funds and the ICRR rule implemented by RBI, which had a 25 basis point impact on the net interest margin. Now, PAT has come in at 15,976 crore. We were working with a number of 14,616 crore, largely led by two key factors that, there was lower provisions this time around and lower tax rate also, which actually held the PAT this time around. Net interest margin, that has come in at 3.4% of total assets. In the previous quarter for the bank alone was at 4.1%. Management had guided anywhere between 3.6 to 3.8% kind of a level. X of the one-off that you have from ICRR, it is around the 3.6%, so it is at the lower end of the guidance. ROA, that's the best part, it's being maintained at 2%. Even for the standalone bank, it was at 2.04% in the previous quarter. The risk weight asset to advances, that ratio has come down to 93.3%, and for the bank alone in the previous quarter it was around 103.4%. So a mixed bag, but not too negative. Back to you.
All right, and it'll be interesting to see how the street reacts to that, right? Because the stock has already corrected a lot this year. Abhishek, thanks a lot for running us through all of those numbers. Like Abhishek was pointing out, maybe it's more positive than negative this time around. And another positive is that the management is sounding quite optimistic this time. So listening to some excerpts from HDFC Bank's MD and CEO Shashidhar Jagdishan on what he has to say on the earnings going forward.
Bank is poised to silently deliver the core growth that you have just seen in this quarter, and I'm very confident and sanguine that it will continue to do so quarter after quarter, even on a larger scale. Maintain the profitability in the range of 1.9 to 2.1% as in the past. We are extremely excited about this merger, and we will slowly but surely demonstrate to the world that how we will execute the way we have done in the past.
All right, that is the word coming in from the HDFC Bank management. But with that, it is time to get into a short break. When we come back, we're going to shift focus from equities and talk all about the cues coming in from the commodities market. That entire space has been very hot, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's talk about the commodities now. So Manisha is here with an update. Manisha, there are expectations of a deal between the US and Venezuela. So how is crude behaving ahead of that?
There has been some, profit taking ahead of that. There is a conversation that has begun, but there are just so many ifs and buts into that, and that would take some time to materialize on ground to be executed. But the crude prices are more about sentiment, and we have seen that lead to some profit taking. So after 7.5% of gains in the previous week for the crude oil prices, we have seen prices come below $90 a barrel in Asia right now. Also, there is no immediate escalation in the Israel-Hamas war, and that is also led to some premium going off. The markets will now watch for the U.S. president visiting Israel on Wednesday and what kind of statements come out of that. So until then, I think it's going to be some consolidation that you'll see across commodities. Not just the crude oil prices, there is some profit taking that we saw in gold, which gained 5% in the previous week. They're looking at some profit taking coming in for that one as well in Asia today.
Okay, Manisha, thanks a lot for getting us all of those details on how the commodities are behaving right now. But with that, let's also move on and get you the latest update on the Israel-Hamas conflict. As Israel's bombardment of Gaza continues, U.S. Secretary of State Anthony Blinken has confirmed that the U.S. President Joe Biden will be visiting Israel tomorrow. We have NBC's Ellison Barber, who has more details on this. Ellison.
Secretary Blinken met with Prime Minister Netanyahu for about 8 hours, and then late night for our time here, it's well after midnight, he spoke and talked a little bit about some of what was discussed, talked about the humanitarian aid, as well as President Biden making a visit to Israel. Listen to some of what he had to say.
It is critical that aid begin flowing into Gaza as soon as possible. We share Israel's concern that Hamas may seize or destroy aid entering Gaza or otherwise preventing it from reaching the people who need it. If Hamas in any way blocks humanitarian assistance from reaching civilians, including by seizing the aid itself, we'll be the first to condemn it, and we will work to prevent it from happening again.
We thought that the Seoul land crossing that goes into Egypt, the Rafah crossing, was going to open at 9 a.m. local time this morning so that foreign nationals could leave Gaza if they wanted to and humanitarian aid could come in. That did not happen. We hear Secretary Blinken talking about the need for aid to get in, but humanitarian corridors, safe zones, those have not been agreed upon. The UN, when they were talking about the fact that the Rafah border crossing didn't open this morning, said there is this situation where multiple parties need to agree to a plan to get humanitarian aid in and or to get people out. And that's difficult right now because two key people involved in that, Hamas and Israel, they are not currently on speaking terms. The aid that was at the border this morning, most of it has been positioned, according to our producers, in that region about 30 minutes away from the Rafah border crossing, ready to go in when possible. We know the EU has said that they are going to send humanitarian aid as well, but there still is this question of how and if it can get in because so many sides need to agree to allow it to enter. It's a big focus of the international community, and rightly so, but so far there hasn't been a concrete agreement on how that would get in or when it would get in. Efforts that we thought had been discussions we thought were fruitful yesterday with Secretary Blinken and the Egyptian president then proved this morning to not actually go into effect.
All right, that is the latest from the conflict in West Asia. What is key to track, like we were mentioning, is, of course, U.S. President Biden's visit, as well as whether humanitarian aid can get in and whether the Rafah border, in fact, does open. With that, we're going to wind down on this edition of Power Breakfast with the news that the Asian markets are looking very good, all of them in the green. Actually, there's been a little bit of a pullback right now that I'm looking at in the Shanghai market. So that's around 0.2% in the red. But the implied open for our own market still looks very positive. Around 65 points higher is where we're at on the Gift Nifty. Thanks for tuning into Power Breakfast. We have Bazaar Morning Call up in 2 to take you through all of the action.